Think of it like putting money in a savings account where the bank pays you interest, except in this case, you're helping keep a decentralized blockchain secure and functional. This process usually happens on what's called a proof-of-stake blockchain. What exactly is crypto staking? In the simplest terms, staking is when you lock up your cryptocurrency to help support the operations of a blockchain network. In return for contributing your coins to the system, you earn rewards, usually paid out in the same token you staked. Now, before we dive in, let's get one thing out of the way. Staking is not some magic button that makes you rich overnight. Instead, it's more like planting seeds that can grow slowly over time. So let's start with the basics. So you've probably heard the term passive income thrown around a lot lately, especially in the world of crypto. And one of the most popular ways people are making their money work for them without constantly trading is through something called crypto staking. If you've ever wondered how it works, whether it's safe, and how you can get started as a beginner, then stick around because by the end of this video, you'll have a clear roadmap on how staking could potentially become your first step toward generating steady passive income in the world of digital assets. Unlike proof of work, which relies on energy-hungry mining machines, proof of stake lets everyday holders participate by staking their tokens. Networks like Ethereum, Cardano, Solana, and Polkadot all use some form of this model, and they reward stakers with annual percentage yields that can range from a few percent to double digits, depending on the coin and the conditions of the network. Now, how does this translate into passive income for you? Let's imagine you buy a certain amount of crypto, say $1,000 worth of Ethereum. If you decide to stake it, you might earn around 4 to 5% per year depending on the current rates. That means, without doing anything else, you could earn about $40 to $50 worth of ETH over the course of the year. Of course, if the price of Ethereum rises, the value of those rewards could grow even more. On the flip side, if the price drops, the value could decrease. So staking rewards aren't guaranteed profits in fiat terms, but they are steady payouts in crypto terms. One of the best parts about staking is that you don't need to be a technical expert to get started. Many crypto exchanges and wallets make it as simple as clicking a button. For example, platforms like Coinbase, Binance, or Kraken allow users to stake supported tokens directly through their accounts. This is called custodial staking because the platform handles the technical side for you. Then there's non-custodial staking, where you use your own wallet, such as MetaMask or a dedicated staking wallet, to delegate your tokens directly to a validator on the network. This option usually gives you more control and sometimes higher rewards, but it also requires you to be more hands-on with your crypto. So which option is better for beginners? If you're brand new, custodial staking on a trusted exchange is usually the easiest way to dip your toes in. You don't have to worry about the complicated details of running a validator node, and you can usually start with smaller amounts. But if you're someone who wants full control over your funds and you're comfortable managing your own private keys, then non-custodial staking could be a better long-term move. Now you might be asking, what's the catch? Is there any risk involved? And the honest answer is, yes, there are risks. The biggest one is what's called price volatility. Your staking rewards might be great, but if the token itself loses a lot of value, your overall investment could still go down. There's also something known as slashing on some blockchains. This is when a validator misbehaves, either intentionally or by mistake, and part of your staked tokens get penalized. If you're staking through a reliable exchange, you usually don't have to worry much about this, but if you're choosing your own validator, you'll want to research carefully. Another thing to be aware of is lockup periods. Some staking programs require you to lock your coins for a set amount of time, which means you can't access or sell them until that period is over. Others offer flexible staking where you can unstake at any time, but usually the rewards are slightly lower. And of course, never forget the golden rule. Don't stake more than you can afford to hold for a while. Staking works best when you're in it for the medium to long term, not when you need quick access to cash. With that said, There are some strategies beginners can use to maximize their staking experience. One approach is diversification. Instead of staking all your funds in one coin, you could spread them across 2 or 3 different networks. This way, you're not relying solely on the success of a single project. Another tip is to keep an eye on annual percentage yields, but don't chase only the highest numbers. Sometimes projects advertise very high rewards, but they come with higher risks or less proven track records. It's usually better to stake coins you already believe in long-term, rather than chasing the highest APY just for short-term gains. Many beginners also like to reinvest their staking rewards, essentially compounding over time. This is similar to reinvesting dividends in traditional investing, and it can really add up over the years if the network stays healthy and the coin holds value. One more thing to consider is taxes. Depending on where you live, staking rewards may be considered taxable income at the time you receive them, even if you don't sell the tokens. So it's always a good idea to keep track of your rewards and talk to a tax professional if you're unsure. At the end of the day, staking is one of the most accessible ways to participate in the growth of blockchain networks while earning passive income on the side. It's not without its risks, but for beginners who want to learn by doing, it offers a great entry point into crypto beyond just buying and holding. And the best part is you don't need fancy equipment or huge amounts of capital to get started. All you really need is a bit of research, a trusted platform, and the patience to let your assets work for you over time. So if you've been on the fence about crypto but want to explore a way to generate passive income that doesn't require constant trading or staring at charts, staking might be your best first step. Start small, stay consistent, and think long-term. That's how you'll get the most out of this opportunity. Thanks so much for watching. If you found this guide helpful, make sure to hit that like button, subscribe for more beginner-friendly crypto content, and drop a comment below letting me know which coin you'd consider staking first. And if you want me to make a follow-up video diving deeper into specific platforms or strategies, let me know down there too. Until next time, stay curious, stay informed, and I'll see you in the next video.